please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
If you open at 24,500, 550, then perhaps the bank Nifty would be the one area where traders may want to focus if you're looking at short side.
As I listen to investors and how they think about the region, I think there's much more interest now thinking about the long-term possibility in India. Okay. So I think the story is quite constructive actually for India.
85, 90 points higher, now climbing. 10,310 is taken. The Sensex is up 260.
There is nowhere in the market globally, in markets globally, that I see a bubble or I see irrational valuations.
We have exposure in Sterling Biotech, Sterling Port, and also global.
25 to 30,000 farmers have walked all the way from Nasik to reach Azad Maidan here, protesting and demanding their rights.
The market is about 15 points away from the day's high. 10,356 was the high point. We're at about 10,342.
Well, that's the day so far. It's been a short covering move, powerful short covering move, of course, for the market, led primarily by large caps. The mid caps are not doing as well. Of course, advanced decline still in favor of declines. But let's see in last hour if things can move on from here as well. Good afternoon, Surabhi.
Good afternoon, Anuj. I guess it is this last hour, right? That proves to be the bull's nemesis many times. But looking at today's move, the fact that it's been largely steady, there's IT that's seeing some participation, big stocks like Reliance, ITC moving. I mean, what's the reading as the week starts out?
Yeah, today actually last hour could be different from last few days, this kind of move was there in the morning. We thought about possibility of this market making a sharp move towards the 20-day moving average 10,424. Market is about risk reward. This morning, there's so many people who were short, and obviously there would have been a lot of covering. Global markets are good. There was minor FI buying. All these, sentiment changes like this in the market, and that's what's happened today. Today's move is good because it's driven by large caps. You don't want a move which is driven primarily by the mid caps, because those moves fizzle out. When you have moves led by large stocks like HDFC Bank, ITC, Infosys, Reliance, as I said, if these kind of stocks lead the move, that move generally is more sustainable. Let's see. For now, this was a big, powerful move, which was perhaps on the anvil. Now we've seen that the test for the market would be, can it now move past the 10,450, 500? Yeah. Till then, it will remain sort of be a counter trend move. If it takes that out, then perhaps we'll ask you a question again that whether the correction is over or not. But I think one day it's too early to decide that. But today's just been a powerful short covering move and driven by large caps, which means that perhaps this could last for 2 or 3 days. For Share of Trade, Ashwini Gujral and Mitesh Thakkar now join us with closing strategies. Good afternoon. Ashwini, the problem for the market, or for the bulls rather, has been the last hour. Do you reckon it could be different this time, and how would you trade from here?
See, I would think so, because today we've traded at a 15-point premium on the Nifty futures. That hasn't happened so far. And B, whatever selling has come in, just one sector, which is PSU Bank Index, that is the only sector which is down. So chances are that the market is finding buying in all the other spaces other than PSU banks, and private banks have held on all day and built on their gains. So my sense is that today is the kind of day where last hour could be good, and maybe the Bank Nifty can do a 100-point rally, because Bank Nifty has just started its short covering just today. So I think the bank shorts are more likely to cover. The Nifty had a problem area of 10,350, 370. That seems to be getting crossed. So somewhere I think Nifty has re-entered that range of 10,300 to 10,600. So the pullback could gain legs from here. Plus you have some sort of inflation data that's due. So going into that, the markets could close positive and Bank Nifty could gain from here. Having said that, NCC is a buy with a stop of 118, target of 130. Vedanta is a buy with a stop of 292, target of 310. And IIFL is a buy with a stop of 830, target of 865.
Okay, so lots of mid-cap names beyond the Nifty 50 on Ashwini's list for the last hour. Good afternoon, Mitesh. How are you reading today's pullback and what are your strategies?
Yeah, good afternoon. So I think very clearly, getting past 10,320 meant that we'll possibly extend the bounce back, and we did that after the first 30-45 minutes of nervousness. I think we did see some follow through coming in. My sense that we are heading towards 10,440, 450 at the minimum, maybe 10,500, but I think that's the kind of target zone which I'm looking at. Right now I have one buy and one sell call. I have a buy on L&T with a stop at 1293 for targets of 1330, 1335, and Godrej Industries, that's really not participating today. It's broken down a pivot level, so sell with a stop at 549, look for 515 as the target. Okay,
Ashwini, this call on NCC and a couple of other stocks that you're taking, is this just a last hour trade, or do you reckon some of these erstwhile outperformers can make a 3 to 4 day kind of move?
See, the point is at some point we will follow the global markets. We may underperform, but if there are more new highs in store for the global market, then we will rally. And a lot of stocks are ready for that 3 to 5 day type of rally. And given that we have a bit of catch up also to do, chances are, all of these stocks which have held on during the correction, they are likely to participate in this rally.
Ashwini, I also wanted to get your thoughts on this big ITC move that we've seen today. I mean, people are excited that at least cigarettes are not getting more expensive, no changes in the GST structure or the cess. But is there anything more than a one-day wonder here?
See, I think it's a structural move. If you are not bullish on financials or domestic economy, what you want to do is, be defensive this year and, get into these FMCG type of companies like Jubilant, Hindustan Lever, etc., where the hits are not large, even if there are rate hikes or whatever. So I think that's part of that move. It's under-owned and just made a base. So you could get a move till 290, 300. So a different set of stocks are now beginning to move with the financials taking a back seat. So it will be IT, exporters, some of the large cap defensives. Meanwhile, mid caps, etc., will go through a long consolidation, and as we've seen, they will not participate in most rallies.
Okay, by the way, the fresh intraday high now for the Nifty, and that's because of Reliance. I mean, everything is participating, but Reliance has made a big move in the last few minutes, and that's taken the Nifty higher. In fact, Nifty has outperformed most of the indices today, 1.5% higher on the Nifty. Compare that to 1/3 of 1% for the mid-cap index and 0.8% for the Bank Nifty. So, at least you have one component which is not breaking its 200-day moving average, the largest index, the Nifty. The Bank Nifty did that. Now on the way up, that's facing resistance, but at least on the way down, now twice you've gone there and you bounce back, and that too significant bounce back from there.
Absolutely, and as Anuj is pointing out, highs of the day for the index right now. Well, on that note, let's also welcome in Deepak Shenoy into the conversation. Deepak, your thoughts on some of the financials, in particular, the kind of move we are getting on the private sector banks now. You think the worst is over and the risk reward is favorable, buying from here on?
Afternoon, Survi. I think private banks have not seen enough yet. I think Axis and ICICI have been in the limelight somewhat because of the exposures that seem to be coming out piecemeal. We found out about 200 crores, I think, in Axis recently. And I believe at least in the next few weeks, we're going to get a lot more coming out from the RBI assessment matrix, which is happening now on a weekly basis. More of such potential, we won't call them frauds, but I think NPAs that were not earlier determined to be NPAs that are now NPAs because RBI determines it to be so. Next 6 months, I think we're going to see some more of this hit the system. The NCLT resolutions are also going to hit their balance sheets because they've only provisioned 50% and looks like many of them are going 75% haircuts or more. So not extremely positive about them. HDFC Bank, of course, still remains a very, very strong play.
Okay, HDFC Bank still remains a very strong play. We have SP Tulsian of sptulsian.com also now joining us. Mr. Tulsian, good afternoon. The big move today has been on the two PSU banks, IDBI Bank, which had been, of course, flying away and now has seen sharp correction. And your thoughts on Andhra Bank, which is now down 12%?
See, I think if you have this, if you take a call on IDBI Bank, I have been cautioning that there is no reason for the stocks to move up. But probably the technical factors have led to seen happening that. Coming on Andhra Bank, if you have the news flow, though the news flow is nothing new, is the Sterling Biotech scam has happened about a couple of years back or maybe 3-4 years back. And if you see those things, this is just a sentimental effect. But we have been cautioning that, there is no point in remaining invested in the small size PSU banks kind, maybe like Allahabad, Andhra, United Bank of India, those kind of things. Because the depth of those banks are not seen to be very, 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 very deep. And if you have these kind of scams coming in, then you are bound to take these kind of things happening. Because as such, the perception on these stocks are seen to be quite fragile. And if these kind of news flows coming in, then that is seen quite negative.
One more stock that's had a good run today is actually Bharti Airtel. Both the Bharti twins, even Infratel has been holding on to gains. Bharti Airtel now quite strong with a 4% up move. Deepak, any thoughts on Bharti? I mean, it's gone through its own level of pain and correction last several months now. What's your view?
So I think we're looking at the numbers. Bharti Airtel is not very exciting, but there are going to be three players left in the fray. There's going to be Jio, Airtel, and the Vodafone Idea combined. That gives them some potential if there's a lot of room for growth. But according to me, again, the mobile space in India is mostly about market share gains. So the next 1 or 2 years may still be okay for Bharti Airtel while the other players die. But I think they're going to struggle, in terms of price competition in the longer term. So I think it's a good company, big. They have a big African play as well, which I don't think has seen any returns. But while they survive, I don't see them giving us, great 20% plus returns. So not really interested in the stock.
Okay, just pull out the intraday chart also of Adani Enterprises. It looks like the market is now in a mood to cover some of these shorts. Mr. Tulsian, do you think Adani Enterprises has corrected enough? And is this a good buy now at current price?
See, in fact, Adani, if you see this, the Subramaniam Swamy news on that Adani Group, in fact, in that process, probably Adani Enterprise has taken the maximum hit. And in fact, Adani Port has not corrected at all, and maybe I would say that was just correction in line with the whole market. So yes, now the short covering and some kind of renewed buying interest is seen coming back in Adani Enterprise. And I think that all three Adani stocks, maybe Adani Transmission, Adani Enterprise and Adani Port, are looking good buy at the current level.
Okay. Another set of stocks for you, Mr. Tulsian, again news related. A lot of the spirit stocks are excited once again. Again, relief that there's nothing happening on ENA, at least not in the recent GST meeting. What would the view be and what would be a better play if you were to advise a fresh entry now?
See, in the morning I've said that, no bad news is a good news. And in fact, if you take a call on probably first on the United Spirits, I don't think that there are any fundamental reason for the stocks to move up until we see very good Q4 numbers from the company. But yes, because stock having corrected from 4,000 to 3,000 and the kind of corrections and maybe profit booking both we have seen having taken place in the stock price, probably has led to some kind of short covering and renewed buying. And coming back on the Radico Khaitan kind of stocks, they are already seen to be quite rich, having risen a lot, maybe by about 50% in this last maybe 3 to 4 months. So taking overall view on the breweries stock, probably I don't think that they are investment worthy. Maybe if you want to play from a short-term point of view, one can take a call on the United Spirits just for a rise of about 4-5-6% from here on. But otherwise, we don't advise investment call on all these stocks.
Okay, highs of the day now, 500 points higher on the Sensex and about 200 on the Bank Nifty, 160 higher on the Nifty. So, Ashwini, what's the next port of call on the index?
See, on the index, I think 10,500, 550. That's where the fresh resistance should come in. But overall, you can say that by holding on to this 10,300, 320, the market has gained some stability because it's come back into the range from where a breakdown had happened. And I think as we go into tomorrow, day after, the financials will show you fairly sharp short covering because that is where the hit had come. So they are now beginning to catch up. So I think this could be a multi-day type pullback which could gain strength from here.
Afternoon of trade, almost every pocket of this market is participating. Take a look at stocks like NTPC, take a look at some of the OMCs now all of these stocks surging to the highs of the day. HPCL, BPCL, IOC, actually they're having a fairly good run now. Good gains coming in on most of those stocks. Mr. Tulsian, any thoughts here? The OMCs, which are also, of course, well off their 52-week highs?
See, in fact, for last 2 days, in fact, I've been saying that specifically on OMCs also, we initiated a buy call, including on Chennai Petro also. And I've been saying that, probably the market will see this buying coming back. We were expecting it to happen from tomorrow, but it has come a day early because the market was deeply oversold. And in fact, if you see, I don't totally agree that this is purely short covering, because any market, if you have this kind of rally coming in, first it gets initiated, with the fresh buying, and then thereafter the short covering comes in. And there is no harm if the market has fallen on the short sell, then obviously the short covering element will also be there. So yes, purely based on fundamental valuations, in fact, we have been saying this for last 3 or 4 days that market is bound to bottom out in the next 2-3 days. And in fact, we have been taking the call till advanced tax selling, which is likely, which we have said that it will get over by tomorrow. And generally, always it is the tendency that we see the selling ahead of the advanced tax. So honestly, I don't see any reason. And in fact, April will be seen quite healthy going forward. In fact, market experts were, taking a call of 4-digit on Nifty future, which we said that it is unlikely to be seen. And in fact, this correction has made the market quite healthy. And I think that once we see these kind of levels moving back, even if the Nifty future holds 10,300 level, that will be seen quite good. And in fact, gradually recovery from here on. I am not ruling out some kind of profit booking closer to the end of expiry also in the last week of March. But April series is very likely to remain healthy, and even the second part from here on is also seen to be quite healthy. So in the background, it is always better that yes, look for, and oil and gas has always been of our top pick. Apart from 3 OMCs, we have also initiated buy call on Mahanagar Gas Limited, Petronet, LNG, GAIL kind of stocks. So we continue to remain positive on oil and gas space, and more on the frontline stocks, which have shown big correction.
All right, Mr. Tulsian, we will leave it there today. Thanks a lot for joining us. We'll talk to you tomorrow, of course. By the way, just pull out the intraday chart of Yes Bank and ICICI Bank, 2 private banks where you have had some shorts over the last few days. Yes Bank is making a sharp move at the high point. Axis, ICICI is the other one, which is in high of the day, 2% higher. Let's see Axis. I haven't checked that on my screen yet. Pull out Axis Bank's intraday. Yeah, 2% higher. Highs, yeah. Exactly. Ashwini, technically, you see more move for these stocks now? Some more buying?
I would think so. I said at 2:30 that you could have a 100-point move. Basically, the market getting above 10,300 has led to this first round of short covering. I think as more and more people gain some confidence, the Bank Nifty could, finally gain 800 to 1,000 points of the entire fall. So for the moment, you should be carrying the Bank Nifty long positions home.
Okay, well, the good cheer in the market, that's not really helped the PSU Bank's case much. That index is still very close to the lows of the day, not exactly there. But yes, the troubles there continue. Lata is now joining in to talk about some of the latest moves. Of course, some more reports coming through with respect to certain banks and individual account exposure, and the impact that the RBI's latest NPA norms could have on these banks. Lata.
Okay, well, I just want to give a graphic idea of the way in which some of the stocks have fallen. Some of these stocks, Andhra Bank, UCO, Union, are all at lows that are even below the Lehman crisis lows. It's important to get that perspective. And if you look at Allahabad, OBC, Bank of India, if they go below this 2-year low, where they are now, then they again go to lows that, that they last saw in 2009, 2007, 2008. Those kinds of levels. Likewise, even the otherwise slightly bigger banks, Canara, Syndicate had slightly better results. Even those are trading at 2-year lows. I just want to put that in perspective that they are at some, fairly ugly low levels. Now, what caused this? We keep speaking about the RBI circular, but now it is 1 month old. It was February 12th. Of course, it was a hard-hitting circular, but it was an effort to clean out everything. All the poison. So, you could see this kind of a rise in NPAs, but the numbers I'm quoting are Credit Suisse estimates. This is a February 14th report, nothing new in this. The point I'm trying to make is all this bad news by now should already be in the price. That is why the banks are where they are, because this coming deluge or coming rush of NPAs is already getting factored in. But why is it that PSU banks are not falling, are not stopping the fall? My sense is that there is a fresh set of rules and directions that came from the government about a week back, asking them to examine all NPAs over a 50 crore for fraud. Now, this has actually set a cat among the pigeons, because there is a certain uncertainty about how do you gauge the thin line sometimes between failure and fraud. We spoke to a lot of bankers. They say that they've identified the accounts where they are consortium leaders. They have to go to the auditors, you know, the Ernst & Youngs and the KPMGs, and get a forensic audit done. It leads to a lot of uncertainty of your own future. I mean, if I say it is a fraud, then why did you sit with it? If I say it's not a fraud, what if you discovered a fraud later? It's thrown a lot of uncertainty into an already messy picture, or an already scared set of bankers. The more hard fact is they're going to run short of capital as well as they make adjustments for this hopefully last set of NPAs. And this is what will clamp down lending, and this is an uncertain future. How long will the uncertainty be? How much will the growth fall? How long will it fall? That is where the PSBs are not stopping the fall.
Okay, Lata, thanks a lot for explaining that. Deepak, before we thank you, anecdotally, if you buy SBI at these kind of price to books, you make a lot of money. I mean, it's not true of all PSU banks, but at least SBI, you do get a sense that you make money. Are you buying that stock at least, or no?
No, not SBI. I think it's expensive, because if you wanted to buy public sector banks, there are healthier, relatively smaller banks. I'm talking 200 to 250,000 crores in deposits kind of banks, where I think the risk reward is greater. But SBI's problem isn't the price to book; it's the book. We don't know what the book is, because suddenly something new will come up, and they are the lead bank in literally every big corporate loan in the country. They don't participate if they're not the lead bank. So if a fraud is going to come, SBI is almost by default going to get involved. So yeah, I just don't like that risk right now, Anuj. I think if I were to participate in financials, some of the smaller NBFCs and some of the smaller public sector banks, smaller private sector banks, they look more attractive to me, because I don't want to overvalue, pay a high value for a bank where there are so many unknowns.
Okay, fair point, Deepak. Thanks a lot for joining us today. Appreciate your time. Anand Shah is with us, Deputy CEO and Head of Investments at BNP Paribas in our Alpha Managers segment. Anand, good afternoon. The first question that I want to ask you is the correction done with in the financials? Because that's one pocket which got maybe too overcrowded, too overweight in the index, but that's corrected a bit now. Do you think most of the correction is out?
Hi Anuj, very good afternoon. Yeah, I think we will have to divide financials in pockets like private sector retail banks, then you have corporate banks within the private sector, and obviously the state-owned banks. Within NBFCs also, there are one which are the fund-based, NBFCs, and the other ones obviously which are not lenders, but they're sort of, insurance companies, and mutual funds will be the new category which will come up. So I think a very different sort of fundamentals driving each one of them. If you ask me, private sector retail-oriented banks continues to, look, positive in terms of growth, recovery of economy. They're also participating incrementally in the corporate loans also, and they're gaining market share. So they will obviously grow faster than what they had been growing for the last few years. And they've been at the top end of the valuation. So to that extent, it's not unknown to the markets. I think more importantly, beyond corporate banks and the state-owned banks, I think within non-banking space also, our preference has moved towards liability-based financial companies like insurance and mutual funds, because obviously that we have seen a good growth. Whereas on the fund-based NBFCs, which we call it, continue to be well priced into the headwind of a higher cost of funds. So they have a pressure on the NIMs, pressure on the cost of funds. So with that headwind, I think the pricing, it was sort of priced to perfection 3 months back, 6 months back. We have seen some sort of correction, but there's still some more to go. what would we believe.
Afternoon, Anand. Yes, you do like insurance companies quite a lot. I see that in the fact sheet. I also see Bank of Baroda in one of your funds. Beyond BOB, are you looking to buy any value in these PSU banks at all? Does it interest you?
I think what we need to see is, have we seen the pain in the corporate banks and particularly in the NPA cycle, especially on the long-term lending side, be it infrastructure, be it term loans and other space. And I think a lot of those NPAs, as Lata was also speaking about a little while back, is been sort of priced into these companies. What is an issue among many of these banks is actually we don't know and we don't have an uncertainty about what's in the book. And to that extent, within the corporate banks, I think we'll have to be very selective of what we own and whether the processes are in place so that there are not many of the slippages which are beyond the fundamentals as we speak.
Fair point. You have large exposure to auto stocks as well, Anand, and of course Maruti has done well, though it's corrected a bit. A couple of two-wheeler names have done well as well. Hero, of course. Thoughts on whether we have reached a bit of a maturity phase here, or do you think these stocks could still generate the kind of returns that they have? Probably not at the same pace as last 2 years, but still decent enough.
I think we could have said that, you know, as far as urban India is concerned, yes, we have seen quite a lot of penetration game over. What has changed in last 1 year, 1.5 years is obviously government spending on the rural sector. I think it's not peaked yet. I mean, it's not really picked up at that pace as what we would like to see, but this recent budget also speaks about 50% over and above the cost of production assured for the Kharif crops. I think the various concentrated activities around doubling the farm income, I think, opens up the space for both the low-end two-wheelers or all the low-end four-wheeler space. And to that extent, I think a large section of population where the penetration game is yet left still leaves a room for growth. Of course, the growth would not be anything comparable to what we have seen in 2003, 2004, 2005 when the urban penetration was taking off. But nevertheless, I think in the growth-starved economy that we speak, and we've been really struggling with the earnings growth rate in general, these companies looks comfortable in terms of generating a top end of a single-digit growth rate on volumes and a double-digit growth rate on earnings. And to that extent, we still remain constructive on this sector so far.
By the way, the surge in the market is simply continuing. It's looking stronger and stronger. 180 points and counting on the Nifty now. And almost everything's moving higher. The last couple of minutes, Anuj, particularly for cement stocks, have been very good. Ambuja, to take the way these stocks are now rallying. 10,400. The last time we were here was the 6th of March.
Yes.
I don't want to start jumping, and in favor of the bulls and take their case very quickly, but this is turning out to be a pretty solid afternoon, isn't it?
Oh yes, but series high. What was that on the Monday, the day after that? I think that high, once that's taken out, I think that's when you would see perhaps even more short coverage. Let's see if this market has a 20 DMA halt or just slices through that level, Surabhi. But right now, what you've seen is a lot of people have been caught in the wrong side of the market. They've just been shorting, and a lot of bears would have shorted right at the end. And this move would have taken out most of them. I mean, look at the move on the mid-cap index. We're talking about underperformance of the mid-cap index. Even that started to make a bit of a flourishing move, and advance decline once again is almost in favor of the advances. So big powerful move right now. What may have also helped sentiment was again that Friday number from FIs, which was not aggressive selling despite the fear that that part is continuing. So right now things are looking good, and that's the sentiment changes on a dime right now in the market. So that is what we are seeing right now. 10,400, 10,450 thereabout, I think would be the next port of call.
Yeah, absolutely. And we've chosen to go along with Asia today. I mean, if you want to attribute some of this to global excitement, then Europe right now is actually quite somber. It's the Asian markets, Hang Seng, for instance, which have had an equally strong, in fact, even stronger session today. That is the shape of this rally. Anand, speaking about the market, actually, what is your sense? It's been a painful almost 1.5 months since the 1st of February. Do you reckon that this correction is somewhere close to an end? Or are we looking at more of a time correction, price correction? You know, what does the crystal ball tell you, so to speak?
I think valid point. To me personally, this is the correction which was bound to come, and people were expecting it for some time. It's been 13 months since people were saying, look, we'll see a correction and we want to enter the price. Now it so happens that when the correction comes, we start believing the fundamentals of the markets. To me personally, the biggest change which you will see into the March quarter results and other is actually what the markets had been struggling for, which is the earnings growth rate, is something will be put to rest. Even this December quarter results been fantastic. To me personally, the March quarter results will actually be far better, and to that extent, one biggest pain point from a market's continued rally point of view was earnings growth rate, which has been put to rest. Couple of factors. One, growth led by government spending will help. The nominal GDP growth rate is expected to bounce back by almost 400 to 500 basis points. On top of it, please appreciate the inflation. A very low inflation sort of hurts the corporate profitability, and the first round of inflation actually helps the corporate profitability. So a combination of a nominal GDP growth rate, recovery in the growth rate on the back of government spending, as well as inflation would actually help the earnings this year. What will obviously come to the fore in 3 to 6 months to 9 months would obviously be the elections and other stuff. But as we speak, I think we are quite comfortable with this correction. This correction is actually a healthy one, required for a continued stability of the market. And we see earnings being the drivers for the markets in the way forward. So stock picking will actually work more than a general market as such.
Okay, a fair point. Look at the move on the Bank Nifty now. Just pull out the intraday chart. Shall we? 24,712 is what we have. Ashwini, you were talking about 100-point rally in the last hour. I think we have seen 150 points. But what next? Reckon to take profit home, or just carry on? This could extend for 2-3 days.
See, multi-day we are carrying on, because if you remember, the Bank Nifty 200 is about 24,800. So I wouldn't be surprised if you get to that 24,800, 25,000 type of zone, because the market is fairly oversold. So I think you can carry home, because today the confidence seems a lot better, because last hour nothing happened.
Okay. Anand, finally, your thoughts on the consumer space, because you have a fair amount of exposure there as well. I mean, different funds from the likes of a Colgate, Palmolive to several others. Which side of consumer are you more comfortable betting, staples or discretionary?
I think there are twin stories as far as consumption is concerned. Obviously, on the back of the base effect, we had a demon and GST, both a disruption sort of things for the consumption. The urban consumption will obviously pick up and will benefit from the base effect of lows of the last year. Parallelly, as I spoke a little while back also, on the rural side, we would have the government spending, various policies, be it in farm insurance and other space, would continue to help the farm income. So I think staples benefits more from the rural consumption side of the story. So we will be inclined to own staples which are more getting more revenue from the rural India, because the urban India, the staples story, the penetration game is sort of dead, and to that extent the growth in the staples from the urban India would be in the low single digits. Whereas the discretionary spend actually benefits because the per capita income continues to rise. In India, the consumer continues to upgrade. And to that extent, there is also a select few good companies which will benefit in the space of entertainment, in the space of travel and leisure, which will continue to benefit with the higher per capita income in the urban India. So I think for fund managers, I think there's enough and more opportunities to pick few companies both in the discretionary as well as staple space.